You buy a multi-million-dollar property expecting passive yield, but you've actually acquired a 24/7 hospitality job. Instead of a hands-off investment, you find yourself working a graveyard shift for price-insensitive guests. To the guests, the estate is effortless, the infinity pool is still, the marble is polished. But behind the scenes, you are glued to a smartphone at midnight, coordinating cleaners and troubleshooting Wi-Fi just to keep the facade from collapsing. This friction exists because most luxury homes are managed using playbooks built for budget motels. Those systems were designed for high-volume, low-complexity rentals, not seven-figure assets with commercial-grade systems. Operating this way makes you a commodity host. Your days are consumed by manual tasks, reacting to every physical and digital failure as it happens, rather than preventing them. Applying budget tier tactics to a luxury property burns human bandwidth on routine nonsense. It ensures that while the house is busy, the owner remains the operational glue holding a fragile system together. Moving past this requires a shift in how the property is structured. You have to move toward asset governance. Commodity hosting relies on manual reactions to erratic data spikes. Asset governance engineers a smooth yield curve supported by automated nodes. This creates a protective ring around the asset, decoupling your personal time from financial performance, allowing the investment to function without constant mental oversight. The path to this stabilized state involves 4 pillars: repairing the pricing model, automating digital communication, predicting physical decay, and expanding margins through specialized niches. Executing these pillars in sequence provides the structural framework to move a chaotic property toward a hands-off wealth engine. We start with the industry obsession with reaching 100% occupancy. While a full calendar looks like a victory on paper, in the luxury tier, it is often a signal of mismanaged risk. Staring at empty dates often causes operators to panic. They assume an empty house is losing money, so they drop their nightly rates to fill the gaps, assuming a busy house is always a profitable one. This behavior is reinforced by platforms' smart pricing tools. These algorithms are designed to optimize for platform volume, meaning they will drastically lower your rates to guarantee a booking, regardless of your actual net profit. This downward pricing pressure trains the algorithm to categorize your estate as a cheap commodity. It erodes your brand equity and pushes your listing into a race to the bottom. Low rates also attract a price-sensitive, high-risk demographic. These guests bring more operational strain and a higher probability of property damage compared to the high-net-worth travelers your asset was built for. This comparison shows why occupancy is a deceptive metric. The left block is at full capacity, earning less profit while inviting maximum wear and tear. On the right, 60% occupancy at premium rates yields a larger profit area, keeping the asset pristine. Intentional vacancy at premium rates protects the property's value. It mathematically yields a higher net operating income by reducing turnovers and lowering the physical toll on the home. To reclaim your margins, you must implement API dynamic pricing. This replaces the static set it and forget it pricing that leaves capital on the table. This graph tracks the impact. While static pricing remains flat, dynamic API tools detect hyper-local demand constraints, like a sudden regional conference, and spike your nightly rates upward to capture that premium. But high-end yield strategy requires pairing these spikes with strict rate floors. This baseline prevents the algorithm from ever dropping your price below a set threshold, no matter how much the platform wants to fill the room. Maintaining this floor requires the discipline to let the house sit empty, rather than accepting a guest who doesn't meet your financial standard. Holding your rate protects both the physical real estate and your brand's position in the market. It prevents the property from being viewed as a bargain option during slow periods. By replacing reactive discounting with disciplined, data-driven yield curves, you protect the asset from market commoditization and ensure every booking is profitable. The next step is resolving the digital bottleneck. The volume of routine guest inquiries at the luxury level is too high for any one person to manage manually without sacrificing response speed. Platform algorithms track your response times to the second. A slow human reply can damage your search ranking, effectively burying your multi-million-dollar listing on page 10 of the search results. We solve this by integrating AI co-hosting tools trained specifically on your property's digital twin and operations manual. Because the AI understands the physical layout and systems of your home, it can accurately resolve complex guest questions in over 90 languages within 60 seconds at any hour of the day. This layer insulates you from midnight digital friction. It secures your platform ranking and ensures guests feel supported, while allowing the human team to remain offline. Digital systems are only half the battle. Every property deals with physical entropy, the gradual degradation of mechanical systems and materials caused by frequent guest turnover. Perfect software cannot fix a physical reality. It won't stop a pool heater from failing or a doorframe from swelling due to humidity during a $10,000 booking. A commodity host waits for the guest to discover a failure. They react to a panicked 11 p.m. phone call and scramble to find an emergency vendor while the property suffers expensive damage. The institutional approach uses computerized maintenance management systems, or CMMS, paired with IoT sensors to monitor the home's mechanical health. Instead of waiting for a breakdown, thermal and humidity sensors track the health trajectories of your most expensive assets, identifying anomalies long before they become visible problems. In this scenario, an HVAC sensor catches a half-degree temperature creep. The system automatically schedules a cheap part replacement during a vacancy window, preventing a catastrophic failure before the next guest ever arrives. Predictive IoT monitoring transforms physical repairs from high-stress emergencies into invisible background operations, protecting the guest experience and the owner's peace of mind. With the baseline protected, we can expand the margin profile. One of the most effective ways to do this is by capturing high-value guest segments that most luxury owners ignore. Nearly 60% of affluent travelers seek accommodations that allow pets. For properties that ban animals, this represents a lost revenue stream of $15,000 to $30,000 every year. Owners often fear damage and lingering odors. These are valid concerns, but they can be mitigated through a structured pet governance system. This system uses a rigid filtering process. By setting strict inputs, you capture the high-margin revenue while creating financial safeguards to protect the real estate. We limit risk by only allowing dogs under 40 pounds and requiring proof of vaccinations. This captures 80% of the pet travel market while excluding the large breeds responsible for the most significant wear. Financially, we charge non-refundable pet fees that specifically fund a mandatory deep clean and air purification after every stay. This eliminates olfactory complaints and keeps the home at a 5-star standard. This structure also allows for concierge upsells. You can offer high-end dog beds and premium treats, or earn referral commissions on mobile pet spas, turning a perceived liability into a high-margin revenue multiplier. Implementing a systematic framework allows you to say yes to more guests while ensuring the property is protected by data-driven safeguards. Moving from reactive hosting to asset governance is about reclaiming your time and restoring the property's status as a high-performance investment. The final architecture brings all these layers together: dynamic pricing to capture demand, AI to manage communication, IoT sensors to prevent failure, and specialized upsells to drive net profit. To see the financial sense, look at the math of professional co-hosting, the watermelon versus the grape. Keeping 75% of an optimized gross revenue mathematically beats keeping 100% of a manual growth. Professional governance creates a larger pie. The ultimate benefit of this system is the absolute invisibility of the complex people and software working in the background to keep the asset perfect. If your calendar is full, but your bank account and personal freedom are not, it is time to audit your current operations. Claim a comprehensive revenue and stress audit at dadium.agency/free audit to see exactly where your property leaves revenue on the table. You can also access the framework for the high-margin pet niche at dadium.agency/luxury pet governance. Ownership should provide the rational certainty that your asset is compounding wealth without demanding your daily attention.